In this video, traders, we're going to look at trading drills, trying to lose as much as possible. It's a fun one. Stay tuned. Hey traders, a very warm welcome to you. Okay, so here's a trading drill that proprietary firms often get their traders to try out on a demo, of course, trying to lose as much as possible in a day. Now, the main rule here is you can't count commissions or spread. So you can't just be back and forth and paying the spread and paying the commissions if you're spread betting. Doesn't count. It's got to be purely based on trade. So in fact, you could kind of dummy it and take out spreads at the end of the day or halve the spreads or whatever it may be. So you need to negate those. It kind of defeats the object of the game or the exercise or the drill. And it is really a game. But this is going to give you a lot of information that is well worth looking at, especially if you're a day trader. Swing trader, this is probably not as valuable to you because it's probably going to take too much time to get the data you need. But for day trader, nice one. Okay, so you have to go into the day trading the market you normally trade, the markets you normally trade. And the idea, really, you can't kind of flick from market to market and just randomly trade. You really probably focused on one or two markets that you like to trade actively, whether that's the indices, currencies, whatever it may be. Your idea for the day is to lose as much as possible. Your number one goal is to be deep in the red by having the most disastrous trades. Now, you've got to obviously fix your size. You can't just go in massive size. We're talking about pips or ticks or however non-value quantified you could do. Not talking about money, piling money in and hope, because it kind of ruins the point of it. Ticks, pips, percentage, basis points, whatever, just a non-numerical value. So the idea behind this is that you are really kind of shocking your mind. You're saying, hey, listen, I want to lose. And so you're going to force yourself to start looking for different things. Where is the worst trade here? What's the loser's trade? What's the worst position to be in? And actually, when you start thinking of it like that, you start looking at the market in a different way. The market might well be trending up and up and up. You might say, well, it's an obvious uptrend here. The loser's trade here is to fade this thing. I'm going to short it. You go short. Sure enough, the market chugs up and up and up. You feel really comfortable with yourself because you've just lost 100 ticks or whatever it may be. Now, that is useful because if you don't capture trend days, why are you not buying that? When you come to losing it, you think you're selling it. Do you see the point? You're actually rewiring your focus. The same could be said for, the market's kind of double topping and you say, well, the loser's trade is to buy this breakout because most of the time it's going to fail here. So you buy it and it continues through and you lose money. You think, well, actually, why was that different? Why have I always fading that when actually under certain circumstances it's a breakout? So you start to then, this is the key to it, guys, is that you split up your trading. I don't use the word problems, hurdles, challenges is probably better, into mental and into a system. So if you're utilizing a system and you're trading and you've got kind of 4 or 5 setups you look for intraday, and there's a pattern here of, that doesn't mirror itself in your real world trading. So you've got your real world trading results, you've got your losing. Now in the real world, you should be completely mirrored, right? Because you're trading the system and stuff, but you're probably going to find some flaws. You're going to find that you look at the trade differently. You're going to find that it's easier to lose money than it is to make money, which it shouldn't be because you're literally just clicking the different side of the ticket, aren't you? That's all you're doing. And so this is going to highlight, hey, is it a mental issue? Is it a system issue? Is it a system issue? Do I have to readjust some of the filters and the criteria? But my guess is it isn't going to be that. It's not about that, this drill. This drill is about the mental side of it because very often you won't want to chase the market. Like, I don't want to chase the market when I'm buying, which is fine, but sometimes you need to chase it. Where do you chase it? Oh, it's pulling back. An idiot would short it here, so I'm going to short it here because I want to be the idiot for the day. Yes, you're right, it pushes up. You need to be able to buy that. You need to be able to flip it on its head. All the kind of things we could put all sorts of patterns up here and candlestick patterns and bearish engulfings and bullish engulfings, whatever it may be. The point is, you need to then compare these trades with the real world trades of, hey, this is a pullback. This chart was very, very similar to 10 days ago when I had the same kind of thing. I traded it differently. Why did I believe that this was easy to make a losing trade and that was easy to make a winning trade when it's identical thing? All I got to do is flip the buy and the sell. Something then in your mind is a block, and then you can investigate that. You can say, well, actually, you know, why didn't I take that when I was actually trying to make the money? I didn't take it because I thought it was too high. But ultimately, in the 10 days of me doing the drill, and this is the kind of thing you want to do, like 5 or 10 days, you know, whenever I did that, I made money. So I need to add into my trading plan, hey, when it's a trend day, don't be afraid to buy in the upper 10% of it. Just make sure you've got a kind of wider stop. Make sure you've got, you know, place for you to manage your risk or whatever it may be. The idea is that you're going to illuminate with a decently bright light the problems you have and the mental blocks you have with taking trades that you perceive are bad trades, because you're hopefully in this drill trying to get the bad trades. And if you see, you can flip it on its head and say, well, actually, there's no such thing as a bad trade. As long as my risk is quantified, I can chase the market as long as my risk is quantified. I can do this, I can do that, I can trade that way because look, I've proven it. I was trying to do the worst thing and it worked for me. I did get the loser, so I just need to flip it on its head. So it's one thing to try. So it's a bit difficult to get your head around it at first, and it's going to seem confusing. But, you know, these kind of drills that we do, we talked about other drills, the idea is to highlight something that you can fix. If you do 5 days of this, 10 days of this, and you get one thing that you've highlighted that's an issue for you, that you can create a fix for, you're on the path. All you got to do is another one, the next one, the next one. You do 30 days of kind of 3 to 5 different drills. You've highlighted 5 different issues in your trading challenges that you can overcome, maybe 3 of them very easily. Imagine the leap you're going to make when you go back to a live account and trying to make money. So have a look at that, guys. Let me know in the comment section below how you got on if you did do this trading drill. Be interested to hear how you did with it. All right, guys, take care. See you next one. Give us a thumbs up if you like this kind of stuff, and don't forget to subscribe and share and all that kind of good stuff. See you next one. Bye.